Hey everyone, it is Evan here from the Trade Risk on Monday, April 1st, here with video number 3 in our long-term market technicals series. This series is all about looking at the very long-term big picture trends across all of the major asset classes, all of the world markets, to sort of give us just a high-level overview of what's going on to sort of help inform our shorter-term day-to-day or week-to-week decisions. We only do these videos once a month, and even that seems like it's pushing it just because we're looking at such 5-10 year time frame charts, and these things just don't change all that often. But surprisingly, even looking at this slide deck in preparation for this video, it amazes me, always seems to, after all of the noise, after kind of getting through the battle of the month, so to speak, and kind of looking at all those shorter term time frames and trying to figure out trend and where we are in markets, and then we sort of come back, step back, and look at this long-term picture, and it's like, oh yeah, we're exactly sort of where we thought we might be, or within that major structure that we talked about in the big picture video last month. This makes total sense. But when you're kind of staring at charts and hunting for ideas and really in the weeds day to day and week to week, you can lose sight of this. So hopefully, this video is helpful. It certainly is for me anyway, just to take a step back and look at these big trends. And it's always interesting to see kind of what the takeaways were last month that we talked about and how the market has sort of developed, with those thoughts in mind. So let's kick it off without further ado. This is stock charts. We like to look at this data sets with stock charts. This is total return charts, and these are also the indices and spot futures contracts where possible. So first up here is the Dow Jones. So notice Dow didn't really change a whole lot last month. We effectively tried to sell off just a little bit in last month's candle, but nothing really ended up taking shape there, and we kind of just closed the month back towards highs, and you can see we're kind of right back testing the past 3-4 month highs here, and we're coming back in. We're getting close to retesting the all-time highs, just around 27,000 in the Dow. You can see we're 800 points away from that at this current trading day, and it looks like that's where the magnet is sort of there, is to just get back up to those old highs and sort of test that level. We've come pretty quick after bouncing and undercutting off of this multi-year, 10-year long trend line here that started from 2009. We tested that right at the end of 2018. We undercut it, we bounced to the upside here, held support, and now we're moving back up to test what has been kind of a double top, so to speak, not in the traditional sense, because it didn't lead to a break and all that good stuff, but essentially we've been up here twice, testing around that 27,000 level. We're going up for the third time. We'll see if the third time's a charm, to see if this all sort of just turns into a continuation pattern, or perhaps we fail there again and we fall back into this range and we develop sideways a little bit longer. We'll have to see if and when we get up there, but right now bulls in control, kind of pushing us back up towards the prior all-time highs, and that's sort of the 800 point air in the top of this funnel here to see if we can get back up there. So that's the Dow Jones, and if we scroll back down here, the S&P 500 really doesn't look all that different. We've got that nice kind of break or hold, I should say hold of the multi-year support here. Not as clean, not a 10-year kind of clean one from 2009, but certainly one from 2015, 2016 when we sold off. If we just kind of look at this shorter term time frame, you can see it kind of found support right in here, and now we're bouncing and sort of getting back up to these prior highs made in mid 2018. So we're trading around 2861 right now in the S&P 500 cash. If we, rally another 50 or so points, we'll be kind of testing those all-time highs. And once again, we'll look to see if and how the market reacts up there. Do we launch right through? Do we fail kind of a third time, fall back into this range, and, sort of move sideways? That's sort of the next step in the story that we're waiting for as of right now. Short, intermediate term, kind of long term, looks like we're in control here and moving to the upside to retest that resistance. So that's the S&P 500 and Dow. When we look here at the Nasdaq Composite, we are a little bit further off from testing those highs. We ended up making that all-time high around 82.50 or so back in 2018. And the structure here is a little different. You know, most of the S&P 500 and the Dow kind of topped out in early 2018 and then kind of failed at that spot again in mid 2018. And when we look at the Nasdaq, we kind of just had higher highs here. We had the early 2018 highs; those were taken out mid-year, and then we ended up pulling back aggressively to this multi-year support trend line, and now we're starting to rally back up towards those prior all-time highs. So a little bit of a different structure here, less of kind of a trading range, more of a smoother up channel that it's been in, but still kind of the context here, the general story is kind of the same here. We're basically looking for a retest of all-time highs in the coming months if this trend can continue, and then we're sort of going to pay attention there to how the market reacts back at those mid-2018 highs. When we go down to the Russell 2000 here, this definitely does have a different look than some of the other major indices here. And this is one that is developing in this kind of longer term broad up channel here. And it did suffer a more significant pullback in late 2018, early 2019, and it did get a good reaction off of it. So the magnitude of the move has been sort of has been sort of pulled out, stretched out on the downside and on the upside. But notice where we are in context here. It is still quite different than the S&P 500 and the Dow Jones, which are just 1% or 2% away from retesting their all-time highs. The Russell 2000 is much more is much further away. It's about 200 points from testing its prior all-time highs back in 2018. So it's very much in the middle of this channel here. But as we sort of talked about in our last couple of videos in this series, with this reaction off of the lower end of this channel, the last time we were here, it led to this nice kind of set up this nice multi-month, multi-year run, in fact, all the way back at 2011. If you argued it started around here, led to that nice run. So if you believe that kind of the lows are in back on this 2018 test of the lower end of this channel, then again, you're still looking at plenty of upside here. You could argue that the Russell still has plenty of room to run to the sort of top end of this channel and to retest those prior highs. And again, you could look at it as the glass half full and say, well, you know what, the Russell, I think, in fact, is underperforming here, and it might not get back up there. It may put in this lower high around the middle of this range, roll back over, and then, maybe do another test of this lower end of the channel of support. We're not here to make predictions. We're just here to sort of map out the broad levels and where the market is likely to go, where the market has the potential to go based on historical key kind of trend lines and horizontal levels. And again, when we look here, we're basically still in this longer uptrend of higher highs and higher lows in the channel. We got channel support down here around 1400. We have resistance or channel top end here around, call it 1800, depending on where you project that. And then you have the prior highs just over 1700. So that's sort of the ballpark there. We're in the middle of this channel of sort of range, and we have that longer term uptrend intact. So that's sort of the scope there. Still optimistic here based on kind of what we're seeing across these other markets. The Russell 2000 has been a leader though, so we do want to pay attention if we see some abrupt selling and we see a breakdown here, a sharp kind of big body red candle coming back down to support. That would not bode well for US markets overall. I mean, international markets as well, right? We're all sort of tied together. But if we saw some real big kind of catalyst or reaction lower, that would not be good. Otherwise, it does seem like we are kind of trying to, navigate this to the upside. When we go down here to breadth, this also sort of confirms the bullish thesis here, is we have the NYSE AD line, which is continuing to break out here to new highs. So when we look at trends, when we look at this bigger price action, we like to look at market internals and say, okay, what is the average stock doing? What is the majority of stocks doing out there? And at this point in time, it is breaking out to new highs here. We have a nice kind of leading AD line here, which is always the most bullish scenario that we can see in the markets. Again, it doesn't mean that we have to go higher in stocks. It doesn't mean this has to all resolve higher, but it's always a good, positive, constructive sign when you have the AD line, which is also making new highs and ideally leading to new highs, because again, as a reminder, we don't quite have breakouts to new highs in any of these major indices yet. We're getting really close in the S&P 500 and the Dow Jones, but if we look at the NYSE AD line, you can see it's already broken out from its 2018 highs, and it's in that trend. It's in that uptrend. So constructive action still developing there for the AD line, and for the number of stocks hitting new 52-week highs minus lows. So last week or last video, we talked about sort of my personal preference for this chart is that I like to see readings, you know, in the nice healthy uptrends. I like to see readings north of 150 to 200. If you take a look here at back in 2016, 2017, you can see we had plenty of spikes and moves above 200, and that's where I want to see this this chart sort of get to, is sort of start to expand above 100. And you'll notice here today we have a 229 reading, but you do need to be careful because this is, I'm recording this intraday, and at the end of the day, the final numbers always get tallied up, and we always seem to get a kind of bullish skew intraday, and then once the numbers close end of day for stock charts, they kind of normalize down to, you know, a lower level in most cases. So just, you know, we'll have to check back in on this. If this does hold for the end of the week, because we are getting a move to the upside at the time of recording this, this would be very bullish here. This is what I'd like to see. But you can see, you know, coming off of these extreme negative readings in 2018, almost a washout sort of readings, we do want to see this start to expand to the upside to suggest that this trend has some legs behind it. So we're still waiting for that. Jury's still out, but overall, still a, you know, a positive reading for sure for the number of stocks making new 52-week highs minus those making new lows. Next up, we have the Volatility Index, and here we're not really doing any analysis here. I just like to kind of throw it in here just for the complete picture. I have the 10-month simple moving average on this chart, so that pretty much corresponds with the 200-day SMA for the VIX, and that number is generally around 16. So that generally that is telling us that, you know, on a given day, the average VIX reading is about 16, and you can see we're trading right now at 13.65. So we're actually trading underneath the historical 200-day average. That to me shows that there's, you know, there's not a lot of fear out there. We're kind of in that trending sweet spot where the VIX kind of hovers around, you know, 12 to 15 when we're in that kind of nice uptrend in the market. And I think staying here, staying underneath that average, generally speaking, bodes well for higher prices as well in the market. But again, no real strict analysis that I'm doing on that chart. Next up, we have the US dollar index. So this is the US dollar index against, you know, a lot of the other different major pairs out there, but it's mostly euro, heavy on the euro side, USD euro, and you can see there's not a whole lot to say about it. It's just going sideways here. It's sideways within the context of a shorter intermediate term uptrend. So again, this is where having the big picture really helps, because if you were to drop this down to a daily chart or a weekly chart, you'd see a more convincing sort of uptrend in place. When we look at the big, you know, kind of macro view, if you want to use that term, you can see we're really kind of range bound in between 89 and 100. There's certainly opportunity to trade that range, and we are heading to the upper half of that range in pursuit with that, again, short to intermediate term trend back up to perhaps challenge the prior highs up around 100. So USD kind of comfortably sort of moving sideways to higher there. And our next chart is high yield. So high yield, looking at the JNK high yield bond ETF, you can see this is a good measure for risk appetite as well. Looking at credit markets, which tend to lead equity markets amongst, especially in terms of turmoil, these tend to roll over first, or sort of act as the canary in the proverbial coal mine. And you can see here the JNK is again leading to new highs here. It's above its 2018 levels. There's good liquidity. Things are moving here. Credit seems strong and flush. So we do, again, have that sort of optimistic tone when we have JNK leading to the upside here as well. Last but not least, on this page 1 anyway, is our MSWORLD World Index. So this is the MSCI take of world equity markets minus the US. So these are all the equity markets ex-US, and if we look at this here, we basically have a very kind of gradual channel here that's been developing since 2011. We've been fairly flat and just sort of making these wide waves up and down, and you can see again in late 2018 we sort of had a test of the lower end of this channel, and we are getting that reaction. We are pushing higher off of it, and one of the things we've been talking about is that if you're a believer in this support being sort of held, is this support being good, this latest multi-month pullback had run its course throughout the course of 2018. If you think the lows are in here, then this has a good amount of runway ahead of it to the upside, going all the way, perhaps back up to 2100 to 2100 plus, if you believe these lows are in, and that we're about to develop a trend back up to the upper end of this channel. That would certainly bode well for these world equity markets. We'll see if it happens. We're still very much on pace here. Again, if we saw some abrupt big negative red candle kind of step in here and push us back to the lows, that certainly would not bode well. But for now, this pattern still seems contained, and we are still making a gradual series of higher lows and higher highs. Now, finally, on the second page of what we got here, I think we got about 5 or 6 more charts. This is the EEM, so this is emerging markets, and this is one of my more optimistic ETFs here that we've been talking about in our past couple of videos, because we have this long sideways range from 2009 all the way to 2017. We went in between $29 and $41, just totally flat here in the emerging markets ETF until 2017, the mid to end of that year. We had the breakout to new highs of EEM. That lasted for a couple of months, and then we sort of started pulling back in this very tight channel here throughout to 2018 to sort of retest this old breakout level, and now you can see we're starting to pop back up over $40. So for me, I like EEM. I'm constructive here. So long as we are above $40 and holding sort of above most of this range in here, I like it. It looks like it has some good potential, some good runway to the upside here. So for EEM, still looks constructive. You can see it's gone sideways for the past 2 or so months, but I do like this if it continues to hold and start to resolve higher. Finally, or actually a couple more, TLT. So TLT made an interesting move. This is where the monthly chart really does help as well, to smooth out the noise and look at some, try and look at some signal here. And last month we had a nice big large range body bull bar here, breaking above that 122.50, 123 area, which had been resistance for all of 2017. It was where we topped out in 2015, and briefly at the beginning of 2016. We had the brief kind of breakout throughout 2016 above that level, but then we fell back in. More or less, the way I look at this is we've effectively been going sideways here since 2015, under or around this 123 area, and we're finally starting to break back above it. So this to me is constructive here. This does signal some bullish events developing, bullish rotation still into Treasury bonds, and perhaps the 30-year bull bond is not done yet, and maybe this is a last gasp effort to turn into some type of false breakout, which ends up resolving very badly for bulls. Certainly possible, but for me, the way I sort of interpret the technical pattern here is, as long as we're above now 122.50 or so, I am constructive here. If we're holding above the upper end of this range, then I do like bonds here. In fact, we had a position we just sold out today in the short term, just because a shorter term swing trade. You can see this red bar, which is funny to see the blip that it looks like in the bigger structure, but we had kind of a breakout trade playing this breakout late last month. We caught a nice piece of it, but the pullback that we're seeing today is enough to stop us out of the momentum side of this trade. So for this tactical swing trade, we are out of that position, but certainly looking for more bullish setups here in the big picture. If we scroll down to gold, we can see here gold not really changing a whole lot. We still essentially have this upper resistance here holding. We had a breakout attempt. We had this test last month around that 1350 area. It once again has failed. It hasn't completely rolled over, so it's still kind of just hanging out here underneath or within the same pattern. So we're still going to keep an eye on it. I like the compression here. I like the fact it's gone nowhere for the past 6 years or so. We have the series of kind of higher lows developing here. Trend line coming up north of 1200. We get this downtrend line here, so we get a nice squeeze approaching for GLD for gold. But because this is a monthly pattern, this frankly could take another year or so to play itself out. So we got to be patient here. But again, I like the potential for some volatility expansion coming in the gold market. And silver, very much the same thing here, kind of testing resistance last month around that $16. It unfortunately failed once again. We talked about the series of, kind of this 1, 2, 3 drive to the downside here, where each drive we saw a, less extreme slope. So we saw just a less kind of momentum sell-off here each time we've kind of pulled down and had this new trend line of resistance, and that bodes well for a potential breakout if we can ever get above it. But for now, we're still wedged in between this just under $14 support and then this trend line, which is coming down around that $16 area. That's still kind of the compression point where we want to pay attention to, and things are getting tight. So just like gold, in the coming months, maybe a year, we'll get some type of resolve here for a bigger move. Last but not least, we have energy here. So we have oil. And you can see oil here has very impressively just ripped here to the upside. Now, it did have a very steep, sharp kind of move lower. It traded from, $75 all the way down to $41 in just 3 months. So it was a very, very sharp sell-off for crude. And now you can see we're retracing about 40, almost 50% of that move right now. It still looks vulnerable. It still looks, just messy here. There's not a whole lot that looks exciting on the longer term picture. Certainly a move from $40 to $60 is ample space to capture a nice sort of multi-week or multi-day or multi-month swing trade. So on a shorter term time frame, there's certainly trends at play here, but this bigger picture just doesn't look too exciting. $41 to call it $70 to $75, that's really the sideways range that we're playing in right now. We're kind of in the middle of it here. Could certainly push higher and put in a bigger retracement, but doesn't really have a nice clean pattern of higher lows and higher highs in either direction. Last but not least, we have natural gas, and natural gas is interesting here because take a look at it. And again, this sound like a broken record, but it's good to get the bigger picture because in the shorter term kind of swing trade recaps that we do twice a week, I've been basically saying how ugly natural gas looks as it's trading just near its year-to-date lows. It's really not participating with even some of the other commodities. It kind of does kind of trading its world of its own most of the time, but it just really is not acting well. But when we look here at the big picture of natural gas, you can see this is multi-year, very significant support, right around $2.65 in natural gas. It's held as support since 2016, and we're testing that right now. So this may not be the best place to get too pessimistic on the long term until and if we start breaking down below it. If we start getting a close, if we start really kind of sinking lower and staying heavy below this multi-year support level, then the tune changes. Then maybe we do get a bigger breakdown at hand, but we do want to just start paying attention to this general area here, start watching those shorter term time frames, and we'll certainly be referencing that in our shorter term videos. Is just the significance of this general area here. So it'll be very interesting to see how it resolves itself. Otherwise, you know, similar to oil, there's no real trend here over the past 10 years for natural gas. I mean, the trend, if anything, is lower, but it's really just sideways because we haven't really been, you know, consecutively making new lows. We haven't been making new highs, of course. We've been making a series of lower highs and a minor series of lower lows, but it's really been sideways here, messy, tough to trade from a bigger picture here, but there's certainly opportunity for you know, those shorter term swing trades. So that is it. That's the last asset we look at there is natural gas. 16 charts once a month. You know, honestly, I say it again. Maybe I'll go to 6 weeks just because some of these charts don't change a lot. But hopefully, some of the big takeaways like a TLT potential breakout, natural gas at some big support, breath leading, emerging markets, you know, holding a big breakout level, stocks moving into resistance. There's some good kind of over big theme sort of takeouts there that can certainly help you in your shorter term trading. At least they help me on some of those decisions. So hopefully you enjoyed this video. As always, you know, you can watch last month's series. I'm going to try and remember to link it up. I think I said I'd link up last month's video if you want to just see how things have progressed, you know, you can watch that. Otherwise, you know, thanks so much as always for watching. You can follow us on YouTube, subscribe to the YouTube channel, or follow us on thetraderist.com. You can hit the blog up and see all of the latest updates we're posting. Have a good April. We'll say have a good April for this video series, and we'll see you in between with all of the usual midweek videos, weekend videos, and trade ideas.